Good evening, guys. Today we are going to study a very important topic, that is trapping. Trapping means how an institutional investor trap a normal retail investor. There are multiple ways, and we will also study level on top of the level that we were discussing in last class. So, what is level on top of the level, and how do institutional investor trap a retail investor? This is our topic for the day, and it's really going to be very interesting topic. The things that we are going to study is LOTL, that is level on top of the level, market traps, and logic behind conventional patterns we will study tomorrow. So today we will study LOTL, that is level on top of the level, or level on top of the level, or we may also call it level over the level. Second thing that we will study is market traps. What are market traps and how many traps are there? Bull trap, bear trap, LOTL trap, and other types of traps that are there in the market. We will discuss each and everything today. So, what is level on top of the level? When we find two nearby demand or supply zone in the same picture, it can be of any time frame, be it execution or be it location, but we will consider the execution time frame. So let's assume that there is a demand zone. There is a demand zone. Demand zone, so base candle and a leg out, that proves that there is a demand zone. And we find another base candle nearby the zone. Then a leg out once again. So basically here we are finding that there are two levels that are very much nearby. So one level can be here, the same thing that we were discussing in yesterday closing picture. So there are two demand zones nearby. There it can be three situations of taking entry that we discussed yesterday also. Situation number one can be, we can keep our entry here. We can keep our entry here. So entry one can be here, and keep our stop loss below the distal of the below supply zone. So here it would be the stop loss. Second situation can be, we can keep our entry here, the entry type 3 we can say, or we can merge both the levels and keep the entry somewhere in between, and somewhere in between, and we can keep the entry here, entry number 2. So does is it really important that these two should be the rally based rally demand zone, or any of them can be drop based rally and rally based rally? It can be in any formation. It can be in any formation. It can be like, the price is moving up, the price is moving up, then a demand zone was formed, then again a supply zone was formed, and nearby this supply zone again a demand zone is also formed. So in this picture we can see that there are two demand zones. One is upper one and the other one is lower one. So in first picture both are rally based rally demand zone. In second picture it is drop base rally. It means prior to this base candle it can be rally also, it can be drop also, doesn't matter. But it can be picture of any kind. My point is, we will have to merge both the levels, be it drop based rally, rally based rally and drop based rally, or rally based rally and rally based rally, or drop based rally and drop based rally, be it of any time, any kind, depending upon the picture of the chart. Base candle can be between 1 to 3. Whenever we see segregation in buying, we will merge both the levels together on execution time frame. Most important, on execution time frame, both are separate demand zones. See, in any situation, our stop loss would be below the distal line of the lower demand zone. As we know कि सारा origin तो यही है ना, प्राइस की शुरुआत तो यहीं से हुई है. सो स्टॉप लॉस वुड बी हेयर, स्टॉप लॉस वॉन्ट गेट चेंज. Entry you can keep it either here or here or between the both levels. If we take entry number one, what are the benefits? First benefit is कि जब entry आएगी, our entry will not get invest, but unfortunately we will not get favorable risk reward ratio, and it will be hard to get 2:1. There are least chances of entry getting missed, but the conclusion is even if we miss the entry, it doesn't give us any loss. Entry number two, let's understand the entry number two. Here it is, entry number two. You will get good risk reward. Entry might miss because हो सकता है 1 से ही चल जाए, 2 तक आए ही ना. Just to avoid the entry, that entry should not miss, we will not trade a broader zone or broader area. We will always have to keep our execution area as low, as small as possible, so that we could earn a higher risk reward ratio. Suppose we keep the entry number 3, entry between the distal line of the upper demand zone. Distal line, this is the distal line of upper demand zone. So entry between the distal line of upper demand zone and proximal line of lower demand zone. This area gives us maximum entry. This area gives us maximum entry until the demand zone 1 is very much powerful. Demand zone 1 itself in itself can be very much powerful, but if it is not powerful and selling pressure, selling, if it is powerful and selling pressure is low, price might get reversal from entry number 1. But if selling pressure is high, what it can happen? Maximum time it will breach the level number 1, it will give the stop loss, and it will revert from our entry number 2. And in maximum cases, we will see that it has revert from entry number 2. Sometimes it may happen that the price react from all 3 points. हो सकता है entry number 1 से भी चले, 2 से भी चले, entry number 3 may also give a proper reaction. Some people tends to buy half quantity on entry number 1 and half quantity on entry number 3. Ultimately the average will be entry number 2. Then if you have taken entry at entry number 1 and entry number 3, ultimately your stop loss is same. So if you are taking entry number 1 and the price get reversal and you are keeping your stop loss here, it is really hard to get risk reward. If it doesn't touch the entry number 3, you won't be able to average that much. तो आपका risk reward सारा failure हो जाएगा. इसीलिए it is always better to keep the entry at entry point number 2. Without supply zone, price can reverse from entry number 1 also. If there is a daily time frame supply zone, price can revert from entry number 2. If price is coming with a pressure, it may come and touch the origin and it can revert from entry number 3. It all depends upon the total top down approach, how it's going to happen, and where we have to take entry. If our entire top down approach says that everything is okay, price is not coming with a huge pressure, pressure is low, then entry number 2 is always good to go for. Demand zone number 1 and demand zone number 2 can be merged. Demand zone, okay, let me draw another picture for you, then I will show you the same picture on stocks. Please listen this video again and again, only then you would be able to get the clarity what I'm trying to say. There is a demand zone, a proper demand zone, then there is another demand zone, and then there is another demand zone. So let me give name to all three demand zones. The upper one is demand zone number 1, the middle one is demand zone number 2, and the lower one, it's the demand zone number 3. So shall we merge all three demand zones in this picture? The answer is clear cut now. As we can see that these two demand zones are nearby, but this is very far away. These two can be merged. Entry can be taken at here and stop loss can be kept at here. But this area should be treated separately. This is in itself a different demand zone from the above two pictures. It has nothing to take with the demand zone number 1 or the demand zone number 2. Demand zone number 3 in itself is a different demand zone. Let me show you how does it work. This is the picture of a Nifty. Let's go to daily time frame of Nifty. I marked the same thing today. Like as you can see, there it were two demand zones nearby. One is clear cut here, drop, base and rally. Another was without base candle wala demand zone, in which we have seen a price reversal from here. So ultimately the entire price movement was from here itself. जहाँ से प्राइस नीचे आ रहा था, the price was coming down and this was the reversal point. यहाँ से price reverse हुआ. So we cannot ignore this demand zone. So there were two demand zones nearby, the upper demand zone and the lower demand zone. This is known as level on top of the level. So what happened? If we would have taken entry at demand zone number 1, probably it hit the stop loss. As you can see, पूरे को पियर्स कर दिया इसने डिमांड जोन को. मिड में कहीं प्राइस आई और वहां से रिवर्सल हुआ. It did not touch the proximal of the lower demand zone. It did not touch the proximal of the lower demand zone, yet distal of the upper demand zone was breached. And then it gave a 2 raised to 1 target probably. So if I would have kept my entry somewhat here and stop loss somewhat here, and target would have been 2 raised to 1, mm, probably here. So yes, it has given me a good 2 raised to 1 target. So whenever there are two demand zones that are nearby, it is always better to merge both the demand zones or both the supply zones and then play with the area. Do not forget to merge both the areas. If you forget to merge both the areas, they may or may not work. It totally depends upon the buying and the selling pressure. But whenever you merge, you always get probability that you won't get trapped. So it's always better to keep to merge both the demand zones or both the supply zones. Okay, let me show you what happened with Nifty FMCG. Okay, let's go back to the picture. Here we can see that there are two demand zones, entry number 1, entry number 2 and entry number 3. Let's discuss this picture only. Or we can discuss the picture at here also, demand zone number 1, 2 and 3. Suppose demand zone number 1 has breached any of the supply zones that were there previously. Suppose there it was a supply zone that was there previously and it has been breached by the upper demand zone, the demand zone number 1. So the entry with demand zone number 1 is also valid. Please note it down. If demand zone number 1 has breached one of the supply zones that was there presently, there, suppose that it was some supply and it has breached that supply and has given closing above that supply zone, so entry demand zone number 1 is also valid. If entry number 1 or the demand zone number 1 is a coinciding level, it is a coinciding level, sports, it is coinciding the monthly level, then obviously we are going to treat the entry zone number 1. Suppose demand zone number 1 is not at all coinciding and 2 is coinciding, it goes without saying that we should deal with only and only demand zone number 2 and we should ignore the entry number 1 and our entry, and we should not even merge both the levels. If only demand zone number 2 is coinciding, then entry should be kept here. If and we will have to consider multiple aspects while considering when to take entry and when not to take entry. It's similar like when to be aggressive and when to be conservative. See, as I told you in the picture, that both the demand zone need not to be that of base candle. One demand zone can also be that of without base candle, as we have done the same thing. As we have done the same thing, as now you will say, now there is no green leg out, but yes, you can see a price movement that move from price from here to here, and you cannot ignore this price movement. It is very much important to notice each and every price movement. So the entire price range that started from this demand zone, it is must that we should consider this demand zone. I would say take 100 rule based trade, make an Excel sheet or diary, give remarks about every trade. Especially mention those trades, those who gave you loss or those who gave you target on the same date, because it is really very much important to understand. Also to mention trades, those hit stop loss the same day, trades that showed long consolidation, that should also be noted down. क्योंकि पता होना चाहिए अपने को कि now this is something that is going to give us a long consolidation. Okay, after the formation of this picture, what happened? Let me show you. There it were two more demand zones. Just look at this picture. There it were two more demand zones. One demand zone was here and another demand zone was here. See what happened? As there it was no supply zone and price approached the all-time high, so there it was nothing to stop it. New demand zones were formed and they were also giving some kind of reaction. So this demand zone that acted as an origin for this price move reacted once, not just once. Then the follow-up demand zone was made, and with this follow-up demand zone from here, you can see reaction again came. Third time again reaction came, but when price came down with a huge selling pressure, see what happened? Then the upper area was breached and price reacted from the lower demand zone. Although this has also been tested, but this is the origin of this entire price up move. Price reacted, price came here, and then an up move started from this place. So origin can never be ignored, origin must always be considered, and price reacted from this area only. This is nothing but a picture of clear cut LOTL level on top of the level. So how do, okay, is there any other demand zone? Yes, one demand zone was formed here, that is without base candle, as we discussed in previous class also, that was of gap down and gap up theory. Another demand zone is here. So there were two demand zones that were coinciding each other. What happened with these demand zones? Let me give them color. Let's paint them blue. Let's see what happened here. This is the upper demand zone. Let's give a different color to the lower demand zone, a bit lighter color. Let's see what happened. Why I'm showing you Nifty every time? Because Nifty is mother and father of the entire stock market. It's the father and mother is Bank Nifty. So how they react, similar with the other stocks react. So if you understand the reaction of Nifty, you would be able to understand the reaction of each and everything. As now this was a quarterly demand zone, and upper demand zone was totally coinciding a quarterly demand zone. So when price approached this level, even with a huge selling pressure, this gave a huge round of, buying pressure. It showed a huge round of buying pressure. But the lower demand zone, that is RB16, the lower demand zone RB16 daily time frame, this was the origin of this entire quarterly demand zone. And when price entered into this area, see, from where the price is reacting, from the distal of the upper demand zone, it is reacting, and now it's at almost at 25,000, 24,813. Today it formed a base candle. We will discuss this thing also in next upcoming class, that just by observing 20-30 minutes, how we can keep an eye on 50 plus stocks in our list. So this is something that we are going to learn in upcoming classes. This is going to be really very interesting. Now let's understand what are traps and how institutional investors traps uh, a retailer, and how we can save ourselves from becoming getting trapped. So traps are created by basically institutional investors. See, you there are two types of trap. One is bull trap and another is bear trap. So let's first of all understand the bull and the bear trap. You will always see a kind of range in the market, range in the market. And what is range? How this range is formed? This range is formed by bigger time frame supply zone. Suppose there is a bigger time frame monthly supply zone, there it is a monthly demand zone. So what, how the price is supposed to react? Price will come down and hit this demand zone, will go up, hit the supply zone, will come down, hit the demand zone, hit, go up, hit the supply zone. What institutional investors assume, as it's touching this area multiple times, as it's touching this area multiple times, multiple supply zones are being formed that are known as um, formation, or you can say the consecutive supply zones that are being formed by when price approaches to the same level again and again, and here demand zones are being formed. So what is happening now? How retailers are trapped? It is said by the news analyst or the YouTube analyst that whenever the price crosses this monthly supply zone, it will go up. It will go up. But this is known as they call it breakout. They call it breakout, and we call it bull trap. Why it is a bull trap? Because just above this monthly supply zone, there it would be, there it is a possibility that there it would be a daily demand zone or a smaller time frame weekly, sorry, daily supply zone or a weekly supply zone. What will happen? Price will go up from this supply zone, and all of a sudden it will hit to this daily or weekly supply zone, and from there price will get down. This is how a retailer is trapped here. It is said कि जब range break हो गई तो now we are going to get a breakout. They will celebrate. Yes, it has broken the consolidation of a long time period. Now the price is going to get up. From here, this thing will happen, that thing will happen, and all of a sudden, because of a trap, as there is another supply zone, the price will come down ultimately. And what is bear trap? Price is going on in consolidation. It is believed that as soon as the price breaks this monthly demand zone or breaks this channel का breakdown जैसे ही होगा, from here there it would be a breakdown in the price itself. Breakdown in the price in the sense price will come down from here. But what's going to happen actually? There it would be a weekly or daily demand zone, that it would be somewhere not in the same picture, rather far away from the picture. And what will happen all of a sudden? You will see as soon as the price reaches this level, as the price touches this level, this breakdown will get fail, this breakdown will get fail, and price will get a huge reversal from there. So this is something we call the bear trap. Means the market is shown as that market is entering into a bear phase, whereas they trap the retailers, and from here market get a huge reversal. Same thing happen on the upper side also. Can we see the same thing in on the chart? Okay, let's go to Nifty Media. Nifty Media. And Nifty Media, there it was a quarterly demand zone, as you can clearly see. And quarterly demand zone was clearly breached. It was clearly breached until here. It did not reacted until you can say the distal line. It was react. It got a reaction. See, as I told you that this will happen in between the two bigger time frame demand zone and supply zone. So there it was a supply zone and there it was a demand zone, and price was consolidating in between both of them. What happened as soon as it breached the channel? As you know what they would have done, the TV analyst or the other people, they would have drawn a line like this, that this is a channel on the upper side and this is a channel on the lower side. So they will say that if price goes above this level, it's a breakout. If price goes below this level, it's a breakdown. So price went below this level and it was shown as a breakdown. And what retailer would have done, they would have been trapped and they would have started selling their position. But what was their actual picture? If we go on weekly time frame, as you can see there, it was a weekly demand zone that I have already marked. As soon as price touches this, the proximal of this weekly level, after breaching the quarterly demand zone, it started returning the price. And this was the moment when I said that yes, this is the area from where media stocks are going to get multiple. How I was pretty much sure, this was the date when multiple same picture was shown in multiple nifty media stocks. And along with that, it's all major stocks. And actually we all were waiting for this trap area, because we knew that the moment this quarterly demand zone will be breached, all retailers will get panic and they will start square off their position. And this will be the situation from where the institutional investor is going to get entered. And from here they entered and they took the price up. And today, and means it was somewhere around, uh, it was at 1339. So at that time nifty media was at 1339. So from 1340 you can say, now nifty media is at 1660. Just see the reversal. This is what we call the trap. Bull and the bear trap. Bull and the bear trap. News plays a vital role in describing the retailer that a stock has ended up a long time consolidation. It has ended up a long sustained resistance or support. Signal, what are the signals by news? On breach of resistance, they recommend to buy. On breach of support, upper thing from where the price is coming back, they call it as resistance. The lower thing from where the price is going up, they call it as support. So when the resistance break up, they say that market is going to up. And when support breaks down, they say that market is going to, they recommend to sell always. So failure of breakout and breakdown is just because of demand and supply zone. And you know, the demand and supply zone won't be in the same picture as it was shown in level on top of the level. It will be a bit behind the picture. Like this is the same picture. One demand zone is here, another is here. This is the same picture. This can be treated as level on top of the level. The picture that we, this and this can be treated as level on top of the level. But this that is just behind the quarterly demand zone is a clear cut example of level, sorry, trap area by institutional investor. Okay, let's understand other types of traps. We have understood the bull trap and the bear trap. Bull traps, these are the supply zones formed by, these are the supply zones formed during downtrend, where novice conventional technical analyst buy the position, price gets a major reversal from these supply zones. These supply zones, these, the upper one. These traps can be formed on any time frame. These traps can be formed on any time frame. Suppose before price hitting the proximal of monthly demand zone, price just approaches the daily demand zone while price was in downtrend. So suppose price was in downtrend and before touching the proximal of monthly demand zone, price just approached the daily demand zone. What will happen? Daily demand zone at one point in time. Okay, let me draw it for you. There it is, a monthly demand zone, and before the price hitting this monthly demand zone, price hit a daily demand zone, a smaller time frame demand zone, and daily demand zone stopped the price for a few days. It stopped the price for a few days, and it's moving like this. But what will happen after the price will hit the monthly proximal and get a proper reversal from here? This is something we call a trap. This is something we call a trap. What is bear trap? Similar way, the bear trap work also. How does bear trap work? Suppose there is a bigger time frame supply zone and there is a daily supply zone. The price is going up. This will stop the price for a while, for a few days, and then as soon as the price hits the monthly supply zone, retailer will be trapped here as the price will get huge reversal from this point. So these are the demand zones formed during uptrend where novice conventional technical analysts sell the position. Price gets a major reversal from the demand zone as we just described the this is the bear trap and this is the bull trap. As we are showing that the market is going to get bull whereas the market is getting bearish. And in the previous picture we showed that market is going to get the bullish sorry the bearish whereas the market got bullish. So whenever the picture that is shown, actually the thing that is going to happen is totally different from actual picture. That is something we call it trap. Now trap type number 2, trap type number 2, that is confirmation entry trap. What is confirmation entry trap? Similar kind of picture that I just showed you. Suppose there it is a monthly demand zone. The price is coming with aggressive pressure. Price hit the area, and after hitting the area, there it formed a daily demand zone. There it formed a daily demand zone, and price went up until daily demand zone, and price is just moving like this, just moving like this. What will happen? What will happen? All of a sudden, price will hit this area of confirmation entry will get reversal from here before means it will not even touch the proximal of this monthly demand zone again. So before touching, price may be coming with an aggressive selling pressure. Price hit the proximal of monthly and formed a newly demand zone. On a daily time frame, price before giving a confirmation entry formed a new consolidation. This is a new consolidation that you can see, and then all of a sudden price hit the confirmation demand zone that is formed on the daily demand zone, and from there after a huge consolidation you get a total reversal. This is something that we call confirmation entry trap. Now there is entry trap type 3, that is LOTL. Trap type 3, LOTL. It is humbly requested to please watch this video as much time as you can, because these are really important. See, I have done a lot of homework to make you understand. I have to find out the pictures, I have to draw the pictures so that I could give you the latest examples, and lot of hard work is involved. So please, please, please go through it. LOTL is something that we have already discussed, but okay, no worries. Let's discuss it once again. The price is going up. Now, suppose it has not given closing above this supply zone. Suppose, just taking an example. Now there are two demand zones to deal with. The upper one, the demand zone number one, and the lower one, the demand zone number two. So how institutional investor is going to trap you here? Both the demand zone are a part of different rallies. Sometimes it becomes really hard to identify them. This is what we call it level on top of the level trap. Price will come with a selling pressure. It might be a normal selling pressure. It will breach the distal of the first demand zone, and prior to touching the proximal of the second demand zone, it will get a reversal. This is something we call the trap type 3, LOTL, or level on top of the level. Remember, the older the formation of daily demand zone, the harder to find it out. We will assume that demand zone 1 is the origin. Which one is demand zone 1? This one is demand zone 1. We will think that this is the origin, whereas the actual origin is going to be the demand zone number 2. That is because the same is not in the same picture, you won't be able to understand. And it's there somewhere backside. You will have to identify it. We will observe after hitting stop loss of demand zone number 1, price will react before touching the demand zone number 2. This is the third picture. There are the small observation that will increase our accuracy. Now let's understand the next trap. This is trap number 4. Trap 4. How an retailer is trapped. When price comes with a selling or buying pressure, we are assuming that it's coming with a selling pressure as we are discussing all the demand zones. So what will happen? It is the same picture that I just showed you in Nifty Media stocks. There it is a demand zone, a bigger time frame demand zone, and just beside is on any other picture there is a demand zone of smaller time frame. What will happen? What will happen to the price? How the price is going to react? Suppose the upper one. Okay, let's draw the complete picture. The price is going up. From there, the price is coming down. The price is coming down with a huge selling pressure, and within one or two or three candles, it reaches the higher time frame demand zone, as we saw in the previous picture of Nifty Media. Suppose there it is a quarterly time frame demand zone, and there it is a weekly time frame demand zone. So what will happen when price breaches a bigger time frame demand zone while coming with an aggressive selling, and suddenly daily time frame demand zone or even a smaller weekly time frame demand zone will reverse the entire price range. It may be because when we do candlestick breakdown, we find that monthly demand zone formation was not because of any good reason. The actual reason of the rally was the daily or the weekly demand zone that was there in the backside. So again, how did we get it? With the proper breakdown of the candle. How did we get it? With proper top down approach. So whenever we do proper breakdown analysis or top-down approach, and we always try to find out 7 on 7 levels, we will see that quarterly demand zone was good once it gave reaction, but it could not breach any of the monthly time frame supply zones, and the price is coming back, and all of a sudden it will hit a weekly demand zone. So now the price is tired. It has completely breached the quarterly demand zone. Now it has tired. इसके maximum pending order has been executed. So selling के भी execute हो चुके हैं and price has got tired. So from weekly time frame it will get a good reversal and a rather a huge reversal. The same example we can also say in Adani Enterprises. We just saw this in Nifty Media. The same example I found in Adani Enterprises. What happened? There it was a quarterly time frame demand zone that was breached. This was a quarterly time frame demand zone that was clearly cut breached when price came with an aggressive selling. But what happened? From where the price got reversal? Is there a demand zone that is there in the backside? There it is a demand zone. From the distal of this demand zone, the price got huge reversal. Again, इसके नीचे भी एक और demand zone था, this one. So if we would have merged both the demand zones and we would have kept the entry in between both the demand zones, तो यहाँ से अपने को एक huge reversal मिल सकता था. So whenever price comes with an aggressive selling, it may breach your higher time frame supply zone very easily. But after hitting that, you will have to see is there any other thing on the backside of that? Is price getting reversal from that area? If it is so, that is nothing but it is. See, अगर आप इस वीकली डिमांड जोन पे एंट्री रखते तो obviously you would have kept your stop loss a bit below the distal line and you would have been able to enjoy this entire rally. सिंगल डे के अंदर प्राइस ने कितना बड़ा रिवर्सल दिया? Let me show you what was the low of this candle. 1017, and next week it made a high of 2222. 100% से ज़्यादा का रिटर्न just by giving an observation to these technical analysis. Even if there it was a bubble, there it was a balloon, doesn't matter. If you're good at your analysis, stick with it. You would be able to enjoy excellent rallies. See, there it was a quarterly time frame demand zone that was being coincided by the weekly supply zone. What happened to the price? Price got reversal from this area until this area. So from 1100 until 3700, you get a huge rally in less than 1.5 year. In less than 1.5 year. Everything is already plotted on chart. Remember one thing, everything is already plotted on the chart, be it news or be it any bigger or short event. Then price came down from that reversal, and again from where the price got the reversal, from this weekly demand zone. You can see again price is consolidating at the same level. यहाँ पर अब क्या हो रहा है, now as the price has breached this weekly supply zone and has given closing above this, so is this area good to go? Yes. अगर प्राइस इधर किसी कंफर्मेशन एंट्री टाइप एरिया में आती है, एज दिस वाज द एंटायर सप्लाई काइंड ऑफ एरिया, इसके ऊपर क्लोजिंग अपने को इसी डिमांड जोन ने दे दी, एंड फ्रॉम हियर वी गॉट अ कंफर्मेशन एंट्री। यहाँ से भी अगर लॉन्ग हो रहे हो आप, तो इट्स गुड, यू कैन एंजॉय द रैली। और अगर आपको लग रहा है नहीं यार ये तो कोई सप्लाई जोन नहीं था, ये सप्लाई जोन था, ओके, दिस डिमांड जोन, दिस डिमांड जोन ब्रीच दिस एंटायर, यही तो एक डिमांड जोन है, इसके बाद तो कुछ फॉर्म भी नहीं हुआ, इट ब्रीच दिस लेवल। सो बिकॉज दिस एरिया इज डिमांड जोन रिस्पॉन्सिबल, आप यहाँ से लॉन्ग हो सकते हो। ये आपको नहीं लगा, ओके, इसने दे दी क्लोजिंग जी इसके ऊपर, आप इस डिमांड जोन से लॉन्ग हो सकते हो। सी, technical analysis teach you and give you reason for everything, why and from where the price is going to get reversal, everything is already plotted on the chart, you just need to analyze and understand the thing. Whenever we do top down approach, the picture get clear themselves. It is just to inform you that if any of your trade hits stop loss, reason for getting stop loss may be the trap areas, and there are only four type of traps that I've already told you. Start noticing it. After 3 4 months these area will be very much visible to you. Once you get, once you start analyzing your trades or a few stocks, you would be able to understand from where these traps are working. So just to keep the class short, uh, I'm going to end it up here. I can show you multiple other examples, but this is something that you will have to show me on the chart. Quarterly time frame, see there it was a quarterly time frame demand zone, the price has not reached here. Okay, let's do its complete top down approach. This is ईयरली टाइम फ्रेम डिमांड जोन, जो एक बार चला जी में, दूसरी बार ब्रीच हो गया। अब ये प्राइस कहाँ से चला, इफ द ईयरली टाइम फ्रेम डिमांड जोन हैज बीन ब्रीच, देयर इट वुड बी सम स्मॉलर टाइम फ्रेम डिमांड जोन जहाँ से प्राइस रिएक्ट किया है। सो जस्ट ट्राई टू फाइंड आउट कहाँ पर है वो डिमांड जोन। प्रोबेबली इट वुड बी अ मंथली डिमांड जोन, प्रोबेबली मीन्स इट वुड बी अ डिमांड जोन दैट इट वुड बी lesser time frame. See, there it is a monthly demand zone, just below the yearly time frame demand zone. Price got reversal from here. This is something we call trap. This is how retail, as there is assumption in the mind of institution retail investor that yearly demand zone can never be breached. Yes, that's true. But what if investor wants to trap you? He will bring the price to ultimately these kinds of area from where the, you can see there is a good golden cross over there in this demand zone, and this demand zone has given a huge rally, as you can see, although ultimate origin is here somewhere 76 rupees, but this is something that we call the trap. This is what I want to make you understand. If you will make a proper excel, if you will try to find out the reason why you got the reward in the same day, why you got the result in the same day, or why your trades got stop loss, you will get an answer. Share your excel with me, share your diary with me, only then I would be able to let you know that from where we can stop getting our trades becoming stop loss. And in next class we are going to understand really something very special, and that is logic behind the conventional patterns, how these channels are made. Not just these channels, rather other things, other formations that are made like head and shoulders or whatsoever flag patterns that are made, उनके पीछे का reason क्या है? What is the logic behind the conventional pattern? Is it, what is the logic behind the support and resistance theory? Is it really demand and supply or something else that we don't understand? सब समझेंगे. Till then, it is my humble request. At least find one or two stocks of Nifty Media, as I have shown you the example, where you can clearly see that there it's a trap area, and from where the price has approached to all-time high or price has got a reversal. इफ़ यू वुड बी एबल टू फाइंड आउट, आई वुड बी वेरी मच हैप्पी कि आज की क्लास आपको कराने का मेरा पर्पस सॉल्व हुआ। हमने जो चार ट्रैप डिस्कस किए वो चार ट्रैप बताने का आपको पर्पस मेरा सॉल्व हुआ। कौन कौन से चार ट्रैप थे? बुल ट्रैप, बियर ट्रैप, confirmation entry trap, level on top of the level trap, and when price comes with a selling pressure। तो बड़े वाला ब्रीच हो जाएगा डिमांड जोन एंड छोटे वाले से प्राइस विल गेट अ रिवर्सल। दैट्स ऑल फॉर टुडे। इफ यू हैव एनी डाउट्स यू कैन आस्क।